Hello everyone, this is Charlotte Sterling from Harmonic Terminal. This is our second market analysis today, following the earlier Bitcoin setup. It is also the second yen-related analysis this week, with a very similar technical structure to the one we recently observed on GP Yen. Before we begin, let me remind you that Harmonic Terminal is available in the live section of this YouTube channel. Inside the terminal, I analyze the setups that appear in the live section table. This table shows active harmonic signals, and one of the most important signals is D equals 0. It is probably the shortest and fastest way to read a trading opportunity. Just 3 characters, D equals 0, and you immediately know where to focus your attention and where to start looking for a possible entry. That is why this small, almost unnoticeable table is absolutely essential in daily trading. Without it, we would not have captured thousands of pips from these setups. Checking dozens of charts every day is time-consuming and inefficient. It is much better to focus only where the market is actually giving us a reason to look. And D equals 0 means exactly that. This is where you should be looking. Today we are looking at Aussie Yes on the daily time frame. The chart shows a completed bearish shark harmonic pattern, with the key D equals 0 point located near the 114.85 to 114.90 resistance zone. This level is extremely important because the pair has reached it after a strong and extended bullish movement. When price arrives at the final point of a harmonic structure, especially after such a powerful trend, the market often enters a decision zone. At the moment, Aussie Yes is trading slightly below the D point, around the 114.10 area. This suggests that the market may already be showing early signs of hesitation near the harmonic reversal zone. However, this is not yet a confirmed sell signal. The pattern gives us a warning, but confirmation must come from price action. The first bearish confirmation would be a clear rejection from the 114.85 to 115 zone, followed by a daily bearish candle or a break below short-term support. If sellers take control, the first downside target is located near 112.50. A deeper correction could then move toward 109.15, followed by 107.20, and potentially even the 104.90 to 104.50 area if momentum accelerates. The oscillator at the bottom of the chart also supports the idea that the market may be overheated. After such a strong upward move, Aussie Yes could be vulnerable to a technical pullback. From a fundamental point of view, this pair should be watched very carefully. Aussie Yes is highly sensitive to global risk sentiment, commodity prices, China-related news, and central bank policy from both the Reserve Bank of Australia and the Bank of Japan. If risk appetite remains strong, Aussie Yes may try to continue higher. But if the market moves into risk-off mode, the Japanese yen could strengthen, creating pressure on this pair. The bearish scenario remains valid as long as price respects the 114.85 to 115 resistance zone. A strong daily close above this area would weaken the bearish shark pattern and could open the way for further upside continuation. So the main point is simple. Aussie Yes is now testing a critical harmonic reversal area. We are watching for confirmation from price action before assuming that the bearish move has started. This setup is very similar in structure to the recent yen analysis on GP Yen, which makes the current yen pairs especially interesting this week. As always, wait for confirmation, manage risk carefully, and do not enter only because the pattern is visible. This was Charlotte Sterling for Harmonic Terminal. Thank you for watching.